I'm Mike. I'm the founder and CEO of EtherFi. So I think there's a couple things that we did that allowed our airdrop to be more successful. And then there was a mad sprint of 36 hours of iterating and tweaking it. People think airdrops are simple, but there's months of work that goes into how to set up an airdrop. My philosophy has always been just don't do stuff that if it came to light, you wouldn't be proud of. In both companies, I was just looking to solve a problem that I was having.
What are the biggest differences between being a crypto founder and being a non-crypto founder?
Crypto is so intrinsically intertwined with gambling. In some ways, the amount of money in crypto is more a problem than anything else. The hype and mania at Eigenlayer and restaking was like the speculative bubble.
What advice would you have to founders, crypto or otherwise? Welcome to the podcast, episode 1 of the Relaunch podcast. And can I have you introduce yourself?
Hey, yeah, thanks for having me. I'm Mike. I'm the founder and CEO of EtherFi.
Fantastic. So I guess I want to start off with you taking me through the last 2 months, because obviously you've gone from DeFi product to household name with the token. You guys are officially a unicorn now, which is tremendous. I looked that up. I have some stats around that I want to ask you about, and you might know better than me, but an incredibly fast unicorn, taking the whole crypto world by storm in a sector that people kind of thought was dominated. So what has the last 2 months looked like for you, and how has your role changed with the launch of the token?
Yeah, it feels like every week is is like a year. So I have to play back what's happened the last 2 months. Yeah, I guess so. We launched our token. Our TGE was March 18th, and so that's the leading up to that, and the bulk of that since then has been the last 2 months, and it's been a pretty. It's just been wild. There's so many things I can say. So the token launch, I'll talk about that, was an incredibly intense and kind of crazy process because of just the amount of pressure that's involved in launching a new token. Not just because of the airdrop that was involved, but certainly the airdrop increased the amount of pressure that was on it. And then, and we've seen both before and since a number of other airdrops go out with, frankly, most of them were not well received. I think ours was, one of the few of the last little while that was actually pretty well received. Probably 95% of people were happy with it, and that was a sigh of relief. And I think there were a couple of things that led to that, which actually go back to. Probably a lot of different things, but just having a track record, in my past, having started and ran another business in Web 2, which is a very kind of customer-centric kind of universe. So I think there's a couple of things that we did that allowed our airdrop to be more successful. So first of all, we did a significant amount of customer feedback leading up to the airdrop. And what I mean by that very precisely, and you can take this as advice, I guess, for other protocols. We had probably 30 or 40 conversations with actual users. And I mean one-on-one, 15 to 30 minute chats with 30 or 40 of our users, telling them, here's how it's going to work. Hypothetically, here's what your allocation, might be. How do you feel about that? What are your thoughts? And so over a period of a couple of weeks, we had these conversations, iterated, had more conversations, and that allowed us to really fine tune how to structure the airdrop such that, under confidentiality, we could, come up with a first cut that was already pretty decent. And then in addition to that, what we did that worked out pretty well is we sort of pre-launched our airdrop. We actually did it on a weekend where we put up a claims page where people could see what their allocation was going to be. There was a whole journey and flow. And that actually was just because of the volume, because that was more public. We got a huge amount of feedback, and then there was a mad sprint of 36 hours of iterating and tweaking it based on the feedback until we did the final kind of drop. And when we did it, as I said, I think it was, pretty universally well received. So that really is the key. Is just it sounds so kind of obvious and almost cliche, but just talk to your customers. Just have a lot of conversations with your customers. Iterate very rapidly, and you're likely going to have a pretty good airdrop. I think what we've seen in a lot of cases is with airdrops that maybe haven't gone as well is just the absence of that. It's kind of like a team. People think airdrops are simple, but there's months of work that goes into how to set up an airdrop. You're talking giant, multiple gigabytes of data that you're processing and parsing and figuring out, based on that data, the right allocations for. There's, thousands of decisions that you're making. There's a lot of complexity to it. You're never going to get it right if you just like try to imagine what the right approach is, and you're never going to get it right the first cut. So that's been in many ways the secret of a lot of our success, is just being much more iterative and collecting feedback. I could talk more about that, but I think that's what I'll say about the airdrop. And then after the airdrop, not to go too long, but we also have done a bunch of things to try and keep the excitement going, because most protocols either lose TVL or kind of flatline after the airdrop. And again, we've seen that happen in a couple of cases. Whereas we've almost doubled since our airdrop 2 months ago. I mean, when we launched, we had just under, I think, 800K ETH. We now have almost 1.4 million ETH in the last 2 months. So we've actually kept, yesterday, like literally yesterday when we're recording this, was, I think, our like third or fourth biggest ever day of deposits. So we've been able to keep the engine going, and I think we've got a lot more exciting stuff in the pipe that will keep us relevant.
That's phenomenal. Is it different being a pre-token versus post-token founder? Is it more stressful? Do you feel like there's a weight off your back after having launched the token? What do you think?
I hadn't thought about it that way. That's an interesting way to look at it. We're so heads down, just focused on kind of solving like the next 5 or 10 problems. I hadn't thought about it as like pre or post token. I think naturally there's there's more awareness. For what it's worth, it's there's more coverage of anything that you do. So there's just an awareness and understanding that anything we release, anything we do is going to be subject to scrutiny, right? And that's actually good. I think that's healthy to be sort of in the public eye that way. We've always been, my philosophy has always been like, just don't do stuff that, if it came to light, you wouldn't be proud of. You know what I mean? Don't do the types of things that if it was known and you wouldn't like it, just don't do that stuff. So we've kind of always operated that way, but now there's like an extra emphasis on that, because the reality is anything that we do probably will come to light. And so we always focus on making choices that, we fully expect everyone to kind of know about, and make sure that we're comfortable with and able to kind of defend anything we're doing. But yeah, it's just the whole ride has been crazy. So I don't know. I don't really see it as kind of a dividing line as much.
Yeah. So I wanted to know that, because I wanted to ask those questions because I know that's been kind of front of mind, and that's been the most, obviously these last 2 months must have been crazy. And your entire founding journey must have been pretty, chaotic, as all founder journeys are. But let's take it back for a little. People who have followed the EtherFi journey pretty closely probably know that you're not a first-time founder, a first-time crypto founder, perhaps, but that you have a background in ed tech, correct?
Mm-hmm.
Can you tell us a little bit about your journey as a first-time founder, and then your transition into crypto, and then how EtherFi came out of all of that?
Yeah, sure. So my background, I guess you could say loosely, I've been in crypto since 2011, 2010, which is to say, I read the white paper. I bought some Bitcoin when it was 80 cents a coin. Obviously, didn't buy enough, unfortunately, but it was that was a fun experience. And yeah, so I got into it really early. I played around with mining. I mean, I've been dabbling in it for a while. I did some arbitrage trading, but it was always kind of on the side until I went full time into crypto. Around the time that I was doing that, I had started my first company. I'd been in a bunch of startups before. I mean, I feel like I've been doing startups kind of my whole life. But
Hmm.
out of the university undergrad, I started a company called Top Hat, which was an education technology company, and that was that was a 10-year journey. We got the business. We raised tons of funding, usual kind of venture capital treadmill. We got it up to around I think it was around 450 or 500 employees by the end of it, including a bunch of M&A that we did. So, and then the business was doing right around 60 million in revenue, was break even, growing 30-40% a year. I mean, it was great. It was an awesome business. And then we sold it to a private equity fund that was based in Toronto, and then I transitioned out of the business and took that as an opportunity to switch gears and focus 100% on crypto. And the reason, I mean, I wanted to do that is because DeFi was really starting to heat up. This was back in 2021, and for the first time around that time period, crypto became about actual products. It wasn't just people gambling on token prices. It was actual products getting built. Applications that let people do stuff that they couldn't do before. Yeah, I mean that's as soon as I was able, I switched gears, and we actually started as a fund. So we actually started as a hedge fund. You could almost say that was like my first crypto startup. And
Hmm.
what one of the funds that we were running was an ETH staking fund, which gave us an opportunity to really dig into the staking landscape and see that with restaking and with everything that had happened since Lido and Rocket Pool had launched, there was an opportunity to build this kind of next generation staking platform and use that as a way to build more of a suite of consumer apps. So that's kind of how the journey from the beginning to where we are today evolved.
Right. And then that gets into our first conversation, which was January of 2023, which was when you guys were raising your seed round, I think. Um,
Hmm.
and then, yeah, a couple stats I looked up. So, yeah, now you guys are a unicorn officially, at least by, fully diluted valuation. Um,
Hmm.
and which means that you've gone from essentially zero to where you are today in under a year and a half. I don't know. I was looking up other stats on the fastest unicorn. The fastest unicorn is Jet.com, which was 4 months, but it looks like you guys are certainly in the top 20 fastest unicorns. I'm not sure if that includes crypto. And I think you perhaps might be the fastest Canadian-led unicorn. So congrats and
Well, I'm not Canadian. I'm Canadian now.
oh no, I'm sorry. For some reason I thought you were Canadian.
Well, I
Um,
did live in Canada for a long time, but no, I moved when I sold the last company.
okay. I guess not then. Scratch that. But yeah, I mean, an incredible feat. Why do you think that was such a fast thing? Does it have to do with your previous startup experience? Does it have to do with just the volatility of crypto market cycles? What has enabled you guys to have this truly
Um,
explosive growth?
um, I mean, I think the I think most good founders can figure out a way to make things work in a kind of wide range of markets and contexts. So I think I don't know, as a pretty effective founder, whatever you end up doing is probably going to be successful to some degree. But the kind of speed that we saw was, I mean, largely to do with just timing and market. I mean, I don't think I can. I think we did a good job executing and building a great product and finding a good fit, but the so much of that just kind of happened. We were riding a wave, I guess, and that wave was driven by a couple of things. One, first of all, just all of crypto started really heating up right around the time we were building and then launching. So just the entire crypto market, 3x or 4x.
Right.
So there's just a lot of capital flowing in. So that was a big driver. The second thing is, we made a huge bet on restaking pretty much on day one of the project, and obviously I was bullish on it. I mean, we wouldn't have bet the company on it if I wasn't. But the degree to which it became the narrative in Ethereum and most of crypto was very surprising to us and to Eigenlayer and to, I think, everybody around. I think just the combination of the market heating up and restaking becoming the narrative is what really drove our growth. So obviously we were a huge beneficiary of the whole, Eigenlayer scaling process. So I think it's a combination of all those things. I think the narrative, the timing worked out. We built a really good product. The team really executed well. So it was a combination of all those things that led to a very fast, growth period. And I think we, like all you can do is kind of respond and iterate and try to drive as hard as you can within the market that you're in, but if the market that you're in is just like exploding and growing insanely fast, you become the beneficiary of that. And I think that's what happened to us.
Right. Yeah, and I know Mark Andreessen, when asked about product market fit, he says kind of market is the most important thing I think he looks for as a venture capitalist. Perhaps it's different as a founder, but yeah, obviously you guys.
Well, yeah, I mean, I think just look, I was working just as hard, maybe even harder in some cases on Top Hat, my last company, and that took 10 years and never got to this scale. I mean, in terms of revenue, Top Hat was still larger, but obviously, again, it took 10 years than where we are today. But in terms of whatever metric you want to put on the valuation, it was a 10-year journey. And again, I thought we had a good product. We were working really hard, but yeah, it was higher education. It was higher ed software, which is a terrible market. It was a shrinking market, actually. So we were like fighting against the market being smaller every year. We were fighting against the fact that education has all kinds of broken incentives, and there was it felt like pushing on a string a lot of the time. But we just sort of fought our way through it and still made a pretty good business. So like that's almost like in a sense, a laboratory experiment where you take the same founder, the same work ethic, the same,
Right.
Execution and drive, and two very different, both good outcomes, but like the pace and everything, I think is very different, driven entirely by the market, I think.
Right. This goes to an interesting point about kind of founders as narrative followers or thesis, driven. That I think about a lot, which is interesting too because you have a fund background. Plus, in Top Hat, it sounds like you guys were doing some M&A stuff as well. So there's a few parallels in your founder journey to kind of being an investor, trader, venture capitalist, perhaps. But I think it does speak your entire journey does speak to this importance in being a founder as being narrative driven or being able to follow certain narratives. Because, yeah, as you said, one of the big differentiators with EtherFi is the fact that you guys were able to pick up and then capitalize on the entire restaking narrative. So, that requires investment.
I look at it as,
yeah, go ahead.
Crypto obviously is very much narrative driven, but like the way I look at it is, I mean, it may sound simple and sort of naive, but like in both companies, I was just looking to solve a problem that I was having, right? With Top Hat, I was, in university, I thought classes were boring, and textbooks weren't very effective, and so I was looking to solve that problem. With EtherFi, I had a bunch of ETH that I wanted to stake, and I didn't like the solutions that the options that were available, and I liked the market, and so I just built a product to solve that. So I never thought about any of the things that that I was doing as narrative driven. I always thought of it from the standpoint of this is a problem that I'm having. I want to solve it. And I also know lots of other people have this problem, and so I think there's you could build something substantial around it. That's kind of how I looked at it. It's very difficult to try and forecast narratives. Maybe some people can do it, but like it's very difficult to do that. I don't know if that's a good way to to found businesses. I think it's more about like finding a problem that actually matters and impacts a lot of people, and then working really hard to iterate and make it broadly applicable.
Right. One of the probably the criticisms or the obstacles you faced early on in your in launching EtherFi was this kind of like monopolistic giant in the room in the form of Lido. And in fact, when I talked to people, last winter about EtherFi, and I was very into, LSTs at the time, that was basically the number one criticism of all of these protocols that were springing up, and it was like, look, we have this product that exists, it's dominant. What did you think about that? I know one of these components is going to go back to product as well, but what gave you the conviction in the fact that you guys could create something better than Lido, or you guys could perhaps outcompete Lido over the long term?
I think there's always an element of naivete around it, where I don't know, just figured we could do it. To me, I thought Lido was facing a classic sort of innovator's dilemma problem, where they had obviously a very dominant position, huge product, but that ultimately made it hard for them to move fast and change anything about their protocol. And the combination of restaking and also Ethereum enabling withdrawals, that was actually a major protocol shift. Created a new opportunity. It was clearly there was going to be a different type of protocol that was going to dominate staking. And so there was a question, okay, is Lido just going to be able to do it? And, I guess to some extent our bet was either they would, but they would take a while to work up to it. Or the market was just going to get more fragmented, and there was an opportunity to build another large player in the space. So that's kind of how I looked at it. I just saw, anytime you've got a really big, staking is still by far the largest category in DeFi, right? It's like twice, three times the size of the next largest category. So it was a really big market. And when you have a huge market that's replatforming, that's always a big opportunity, right? So that's kind of how I looked at it. I think, and Lido is awesome, by the way. I'm not saying this as any kind of criticism of Lido, but there's also there's an absence, both with crypto founders and VCs, I would actually say, there's an absence of like just experience around execution and building teams and companies, and I felt pretty good about our chances just from the standpoint of being able to execute. Sorry, can you give me 1 second? My wife is texting me. I need to respond to her.
Go ahead. We'll
I'm just seeing the messages pop up.
You're good.
Sorry, she's trying to catch a flight, and so and she's saying she needs a response about something right now.
You're fine.
Okay, sorry.
No,
Go
you're
ahead.
fine. Give me a chance to catch up on some notes I'm making. Um, awesome. So Lido is kind of this competitive space. Then you took Eigenlayer on the other hand, and you said, let us align in this very specific way. What about what caused you guys to say, this is a trend we want to be on and invest so heavily, and led ultimately to the success in terms of TVL and outcome by aligning with Eigenlayer? What was that process like, and what was that thought process like?
Yeah, I mean, uh, seeing the Eigenlayer white paper and seeing some of the early lectures, by Sriram talking about restaking, um, I had a bit of a similar kind of reaction to seeing the initial Ethereum white paper and then the Bitcoin white paper, where there was just an aha moment that made it clear that this was going to be the default. It wasn't just going to be this. This sort of one small thing. It was just all staking is going to get replatformed, and restaking is going to become the norm. So I had that kind of aha moment, and seeing Eigenlayer, dominant almost as an understatement, right? Like they created the space, they created the narrative, they basically owned the category. Building on them wasn't really like I mean, it was an obvious thing to do. So yeah, I think they've done an incredible job of creating a really strong kind of theoretical framework about how to think about restaking that has really captured a lot of people's imaginations and has brought in a lot of builders into the space that are now kind of exploring all the different possibilities.
You say it as if it was an obvious decision, but I don't think it actually necessarily was. If we
No,
look
no,
at
it
other
wasn't.
LSDs.
It felt like a no. I wouldn't. Yeah, it felt like a big bet. Is how
Okay.
I would describe it at the time. And yeah, I mean, it ended up being more right than I think anybody kind of expected. But it, yeah, I just, I don't know. I got a lot of conviction on it and
Hmm.
decided to jump in.
Right. Yeah, and obviously, and ended up being an incredible decision. And this goes also into Ethereum alignment. Obviously, with any like LST, there is a certain level of Ethereum alignment built in. Just by how the product is fundamental to
Hmm.
um, to the network, right? Um, but at the same time, Lido early on supported other chains. EtherFi, obviously, Ether in the name. Uh, is there any possibility of you guys embracing other networks in the future, or is Ethereum alignment intrinsic to the protocol?
It is. I mean, I don't see us like staking. I can certainly see us bridging and integrating with other chains. I mean, that
Okay.
I don't see as being in conflict with what our core mandate is. But I don't see us staking or restaking other L1 tokens. Like I feel like that would be too much of a departure. Like we're not going to be staking Solana anytime soon
Right.
or whatever. But bridging to other chains, I think it feels very much in line with what we're trying to accomplish.
And would you say that's the case because again of this like product first mentality? You know, these are
Um,
it's access essentially.
it's a combination of things. I mean, I'm just very convicted about Ethereum. I mean, I
Hmm.
really think it's the best smart contract platform. Um, is certainly, I mean, it's certainly dominant, but like just aside from that, I feel very philosophically aligned with how Ethereum is getting built. And it's obviously the largest ecosystem. Yeah, it's been around the longest. So yeah, I'm just very aligned with Ethereum versus other ecosystems.
Phenomenal. I want to take it in a little bit of a different direction right now. In this tradfi, or not tradfi, but traditional entrepreneurship, non-crypto entrepreneurship, I should really say, and some of the lessons you took from that. Do you think what are the biggest differences between being a crypto founder and being a non-crypto founder?
I don't know that I'd make that distinction.
That's very interesting.
I mean, there's a lot of differences in terms of different decisions, different ways of building the sort of the entity, but a lot of the core elements are the same. If you just think about like, you know, building a team, like that's probably the most important thing. So that's largely the same whether you're doing a crypto project or a non-crypto project, right? You need to have a very strong eye for talent and be able to organize people and keep them motivated and align them in terms of what they're working on. That's you're looking for different types of people, but like broadly speaking, it's the same kind of thing. You have users, you have customers, and you should be listening to them above all else and trying to understand their needs and how you can help them. That's basically the same thing. The different elements are more kind of environmental, and they have to do with the fact that crypto is so intrinsically intertwined with gambling that there's so much money that even during bear markets just kind of floods into crypto. It's very easy to, I guess, delude yourself into thinking that you have product market fit when really you just, you just printed some casino chips that happen to be having a run. It's very important to kind of be skeptical about that stuff and ask yourself, do you really have product market fit and sometimes it's fine to kind of bootstrap, so to speak, with, a more speculative element to it, but in the end, like for something to last, for an extended period of time, it has to actually have utility. I mean, this is where you look at the top, like really like blue chip protocols like Aave or obviously Lido or Uniswap. Like they offer core utility. I mean, this is why they've been around for years, because they actually offer a lot of value to their users, whereas others that were more speculative and gambling and were kind of a flash in the pan didn't, and so they didn't last. So I think that in some ways the amount of money in crypto is more a problem than anything else, because it really does create a frothiness that redirects a lot of energy towards short-term thinking and more speculative type things rather than like building products for the long term.
Is that preoccupying to you, both as kind of a thought leader perhaps in the space, or as an entrepreneur, the fact that so much of this frothiness and gambling exists? Because
yeah, for sure. I mean, I was never interested in being part of a big global casino. Like that's not, it's just not that interesting to me. Like I don't need to make any more money to, be happy in life. I'm good on that front. So I'm really only interested in doing things that actually like make sense, and I think move the world in a direction that I'm I'm happy with. So that's one part of it, and then just as I said, being realistic about it. It's very easy to imagine, and we certainly looked at it this way, that the hype and mania at Eigenlayer and restaking was like this speculative bubble that like sort of inflated, and then when or if that mania and the points madness kind of goes away, like is all this TV out just going to evaporate? Like that's something that we spend a huge amount of time thinking about. How do we create enough value that like once the speculative aspect of it fades away, there's still something useful there. And I think we've launched a token. Eigenlayer's done their airdrop. I think. And we've seen, our growth has only continued. So I think we're starting to get to a point where we're Lindy, and it's clear that this isn't just going to be like a flash in the pan. But that's something that we've worked, towards accomplishing, both with our like suite of products, with the liquid product that we launched, with the cash product that we're going to be launching, with the amount of DeFi integrations that we've implemented. All these things I think have been pretty instrumental in making sure that there's longevity to what we've built.
Right. In the last maybe 6 months, we've seen kind of this surplus of maybe what I would call infrastructure. Eigenlayer perhaps is one of these things where you know, it offers something fundamentally new and something important. However, it doesn't offer the end use case itself. And you could say this about new layer one networks or, omni-chain bridging infrastructure. There's a whole bunch of, maybe these what crypto VCs might call picks and shovels or some of this infra stuff. Do you think that crypto, to justify where it sits today, needs to build those applications?
Yeah, of course. I mean, that's what we're trying to do. I mean, maybe we end up becoming one of the first like true crypto native consumer apps, right? We've seen
Right.
consumer apps in crypto, but they've all been CeFi, right? They've been whatever, BlockFi, Nexo, Celsius, FTX, and these centralized exchanges. They've all been these centralized entities. There hasn't really been, maybe Uniswap is the closest, as far as just like a consumer app that a normal person can get on and use. And we see that where I think the number of users that are actually like using DeFi crypto is, certainly it's in the low single digit millions. Maybe there's a million or two users that are actually active, and that's a tiny, tiny sliver of a market. I mean, those people are very affluent; they have a huge amount of assets, and so the market kind of artificially looks larger than it is. But it's actually a pretty small kind of sliver of the world, and we want to make it a much larger. We want to make DeFi much more accessible, and so for us, the staking and restaking thing was really just a way to bootstrap this consumer apps business. And so our longer term vision is to build a suite of integrated products that make DeFi accessible and easy for people, with the ultimate goal that we can replace traditional financial institutions for people. So specifically, that suite of products is what we call EtherFi Stake, EtherFi Liquid, and then EtherFi Cash. EtherFi Stake is the staking product. EtherFi Liquid is our DeFi strategy vault, sort of like a non-custodial fund that users can participate in that deploys their assets into DeFi while allowing them to retain, custody and control. And then EtherFi Cash, which is basically a spending account that integrates with a credit card that you can use in real life. And so with these three products, Stake, Liquid, and Cash, you can save, invest, and spend your money without ever having to off-ramp. Because this is a challenge that pretty much every crypto user has, is they have these two worlds that they need to live in, crypto and TradFi, and then there's these rickety bridges between them that they have to cross periodically. Well, the goal with these three products is that people can exist comfortably in the crypto world and use that in their real life.
Can you tell me about the progression of building some of that out? Or what's the time frame and what are the priorities there? Obviously, Liquid, there's stuff that exists like that. The EtherFi Cash product, it kind of doesn't exist. There's maybe some small options and some off ramping services, maybe MoonPay or something like that. But competitors really on this. You're right. It's really rickety off ramps, centralized exchanges,
Mm-hmm.
stuff like that. So tell me what is that process gonna look like going forward for EtherFi?
Yeah, so Stake and Liquid already exist, and it's a really nice, I would say, integrated offering. Liquid is already by far the largest, yield aggregator protocol. I think that's the category they call it. It's over, I think, just about over half a billion now inside of Liquid, which has been phenomenal growth. And then obviously Stake has about 4 billion in TVL, which is great. And then on Liquid, we have two options. We have ETH and now the USD market neutral vault. Okay, and then the third product, Cash, it's a non-custodial wallet and credit card attached to it. And the power of these things isn't so much that like each one of those products independently is. I mean, I think they're good products independently, but the real magic comes from the vertical integration, from the integration
Right.
between these three products. So, because when a user deposits their ETH, let's say, I think a lot of crypto native users view ETH as kind of their core savings asset. When they deposit their ETH and stake it to earn, the native interest rate of the network, uh, the first question is, all right, what can I do with this? Is there, do I just leave it in my wallet or do I want to do anything else with it? And most people, I think, are overwhelmed when they try to look at the now hundreds of different protocols and chains and different places that they can use this restaked ETH in. And so Liquid automates that for them. It makes their choice easy. It kind of lets them say, all right, cool, I've restaked my ETH and now I can deploy it in DeFi and earn DeFi yields and not worry about having to do all that manually. And then naturally, the third question is, well, great, all right, I have all these assets, they're accruing rewards, they're gaining in value. How do I actually use that to benefit my life, right? It's not, for most people, it's not enough to just have a number go up on a screen. They actually want that number to somehow impact their life. And so the natural thing is, well, great, here's a product that lets you actually use this day to day. It lets you either borrow against it or just spend the rewards that you're making. So the magic really comes from the integration between these three products, that it lets you save, invest, and spend your money, which is most of what you need to do if you're a crypto native person. So yeah, long term, I mean, we envision this being kind of a full end-to-end solution that someone will completely dump their bank and just live entirely on chain.
Yeah, it's phenomenal, and with you guys' product focused execution that you're now several or over 10 years deep on, it seems like you guys are the guys to execute on this. So it's really phenomenal. Also, I think it makes sense. You guys are looking at the use cases, and without saying we want to build a speculative, trading card game or whatever using crypto rails. You're saying, here's the core value proposition. And despite it being financial in nature, it's still, we can still derive kind of product market fit and utility for it. It's not this hyper gambling speculative thing, although it does recognize the fact that, there is the fundamental use case that we found in crypto so far is this kind of financial based system, with staking.
Yeah, I mean, I think that the killer app of crypto is finance. It's I mean, I don't know, it can and has gone beyond that in some areas, but I mean, that's Bitcoin was initially conceived as an alternative kind of currency and and money supply. So that's not surprising that the core use case is money.
Right. Excellent. I'll let you go. I know you've got plenty of stuff to attend to. But my last question for you is, what advice would you have to founders, crypto or otherwise? First time founders or starting founders.
Um, anything I say probably will sound kind of generic, and you could, read it on lots of startup blogs. But um, the most important thing is focus on a problem that you're deeply and personally familiar with, because that's going to make it possible for you to understand your customer at a deeper and better level. And then ultimately focus on creating value for customers. Like that's if you do that, then everything else kind of falls into place. All the mechanics and the rote kind of elements of building a startup are things that you can pick up kind of on the fly. So as long as you're working on the right problem, and you've got a good co-founder, good team around you, then everything else kind of naturally falls into place. I would also certainly say, like, being a builder matters a lot. So either you should learn how to code, or you should partner with somebody that knows how to code, so that you guys can actually build the product. That's not something that you ever want to outsource.
Right.
Yeah.
Fantastic. Awesome, Mike. Thank you so much for your time. We'll call it there. Congrats on all this success, and incredibly excited to see what you guys are doing forward. It seems like you've got many years of plans ahead of you. So I'm very excited to watch going forward.
Yeah, I appreciate it. Yeah, thanks for having me.